Hello and welcome to this deep dive into working capital management strategies. I'm delighted you're joining us today. Whether you're a seasoned professional or just starting your journey in finance, this session will help you understand how organizations keep their financial gears turning for growth and stability. Let's jump right in as we explore strategies that enable companies to thrive. Now, here's a quick look at what we'll cover in today's session. To give you a clear roadmap, our agenda today includes 6 essential topics. We'll start with an introduction to working capital, then unpack the core principles and common challenges. We'll discuss strategies and solutions that drive success, followed by tools and important metrics. From there, we'll explore best practices and real case studies, ending with a powerful conclusion to tie it all together. With that structure in mind, let's begin by understanding what working capital actually means and why it matters for every business. Working capital is the day-to-day financial lifeblood of any organization. Think of it as the measure of a company's ability to cover short-term obligations and keep its main operations running smoothly. When managed well, working capital genuinely boosts liquidity, stabilizes the business, and reduces exposure to risk. For leaders, balancing assets and liabilities isn't just about avoiding pitfalls. It's about setting the stage for growth and performance. By understanding the key elements of working capital, organizations build a resilient foundation upon which sustainable success is built. Next, let's break down the essential building blocks of effective working capital management. Robust working capital management rests on 3 crucial pillars: managing inventory, controlling receivables, and handling cash flow effectively. Let's start with inventory management. The goal is to avoid having too much or too little, striking the right balance between just enough stock and minimizing excess. Today, technology and data analytics play a pivotal role, enabling more accurate forecasting and better inventory turnover. Next is receivables control. Businesses must proactively monitor outstanding payments. By establishing disciplined collection policies, conducting regular credit checks, and offering incentives for early payments, companies maintain healthy cash conversion and solidify customer relationships. Finally, cash management. Efficient cash handling ensures there's always enough liquidity available for operational needs, while also reducing unnecessary interest costs. By leveraging automated forecasting and pooling funds, companies gain flexibility to swiftly respond to market shifts. Having explored these pillars, let's see how the core principles tie them together for superior outcomes. Efficient working capital management is built on seamless processes, insightful metrics, and strong cash flow practices. Process optimization means reducing bottlenecks and making cash conversion cycles more efficient. This occurs through cross-functional teamwork and digital upgrades, which foster agility and resilience. Metrics are at the heart of visibility. Robust analytics and automated dashboards allow leaders to track key cycles and predict future needs. With data-driven insights, identifying issues and forecasting requirements becomes second nature. And as for cash flow, accelerating the pace at which receivables are collected and smartly negotiating supplier payments helps improve working capital. It all starts with maintaining crystal-clear visibility and dynamic forecasting abilities. Of course, managing working capital isn't without its challenges. Let's tackle those next and discover the proven solutions to overcome them. Successful management calls for tackling challenges head-on, using the strengths of collaboration, monitoring, automation, and analytics. First, collaboration. When finance, procurement, and operations teams work hand in hand, friction is reduced, objectives are aligned, and strategy execution becomes seamless. Oversight is just as important. By continuously monitoring key variables and making timely adjustments, whether it's due to market changes or supply chain issues, companies stay ahead of inefficiencies. Automating repetitive tasks, like processing invoices and tracking payments, drastically cuts manual errors and speeds up operations, making better use of every resource. On the analytics front, real-time insights empower decision-makers. With instant visibility into cash cycles, opportunities to release trapped capital appear, enabling a smarter approach to liquidity. Now that we've tackled the challenges, let's turn our attention to strategic approaches that move working capital management to the next level. Industry leaders blend flexibility, risk discipline, and modern inventory tactics for outstanding results. They use smart cash strategies, perform rigorous credit risk management, and adopt advanced inventory models to free up cash and drive growth. For example, lean replenishment and automated ordering help boost inventory turnover. Managing risk might involve using credit scoring or even factoring receivables, and maximizing liquidity requires offering early payment incentives and using predictive cash forecasting. Ultimately, it's the combination of these strategies, supported by technology, data analysis, and collaboration, that unlocks true performance. Let's see how these strategies measure up when analyzed through a SWOT lens. Let's take a closer look at strengths, weaknesses, opportunities, and threats. The strengths include strong relationships with vendors that lead to better payment terms, and adaptable policies ready for shifting market conditions. Potential weaknesses might stem from over-reliance on forecasting tools and integrated systems, which, if not properly managed, could be a stumbling block. Opportunities are emerging as digital payments and automated accounts receivable highlight new avenues for growth and sharper decision-making. Threats to working capital management can arise from unpredictable supply chain issues or regulatory changes that drive up compliance costs. Awareness of this landscape is vital. Next, we'll learn how organizations turn challenges into opportunities with advanced management approaches. Organizations evolve through 3 levels of approach: traditional, strategic, and data-driven. Traditional methods often mean siloed teams, manual work, and reactive decision-making. Next comes strategic management, which aligns diverse teams, leverages analytics, and sets proactive policies that anticipate changes instead of simply reacting to them. The most advanced, data-driven approach uses automated monitoring and predictive analytics to support faster decision-making. A culture of continuous improvement is at the center, constantly driving growth and efficiency. Understanding where you stand on this spectrum helps identify the best pathway forward. Let's now look at metrics you should be using. Measuring the right metrics allows organizations to quickly assess their financial health, optimize resources, and benchmark performance. First, days sales outstanding, ideally around 30 days, measures how quickly receivables are collected and serves as a direct indicator of cash flow health. Next, days payable outstanding, typically 60 days, tracks how long it takes to pay suppliers, influencing cash management and supplier relationships. Finally, inventory turnover ratio with a benchmark of 4 times shows how efficiently inventory is managed. Higher ratios indicate smoother and more efficient operations. Metrics give you the numbers, but let's explore the digital tools that drive modern working capital management. Today's digital solutions revolutionize working capital management across the board. Automated forecasting platforms use machine learning to predict real-time cash flow, plan scenarios, and optimize allocation, significantly reducing manual work and boosting accuracy. Integrated ERP systems create a unified platform for tracking inventory, receivables, and payables, enhancing collaboration, visibility, and control, even across multiple departments. Digital payment solutions help businesses streamline collections and supplier payments, automate reconciliation, and improve transparency while minimizing error rates. Now that we've laid out the foundations, it's time to see how best-in-class companies put these principles into action. Leading organizations excel by instilling discipline, embracing technology, and fostering collaboration. Regular benchmarking against top peers identifies strengths and uncovers performance gaps, driving targeted improvements to achieve world-class standards. Policy discipline sets clear guidelines for credit, collections, and payables. Reviewing these policies regularly ensures they stay relevant as business environments evolve. Digital adoption is central. Investing in automation and analytics allows companies to quickly identify issues and respond almost in real time, promoting adaptability. Collaboration across finance, supply chain, and sales breaks down silos, encourages rapid adjustment, and supports proactive planning. Let's map out a practical, phased approach to working capital transformation. Achieving truly agile working capital management is a journey through 4 stages. First is planning. Set clear improvement targets, select meaningful KPIs, and lay out priorities for digitalization and process upgrades. Then comes execution. Implement these new solutions, refine your policies, and use dashboard tools to maintain real-time oversight. After execution, assess outcomes. Embed continuous reviews and benchmarking to keep performance on track and adapt as needed. Finally, it's all about optimization. Continuous improvement ensures that working capital benefits scale sustainably, supporting long-term growth and resilience. After covering this phased roadmap, let's wrap up with the final takeaway. Strategic working capital management is more than just a finance exercise. It's the key to operational agility and building a future-ready business. Companies that prioritize discipline, adopt digital tools, and foster collaboration will unlock new levels of resilience and growth, setting themselves up for success in an ever-evolving marketplace. Thank you for joining me today. I hope you leave with practical ideas and the confidence to enhance your own working capital strategies. Be sure to subscribe for more insights and drop your questions or comments below. I look forward to hearing from you.